We think the portfolio and the strategy is differentiated in several different ways. First of all, we run a very concentrated active portfolio. So we've got between 15 and 25 holdings. That means we can be very different to the underlying index. We've got a very high active share running at about 90%. So that basically means that 90% of our portfolio is different to the index. That gives us a very strong ability to be able to outperform longer term. We're long-term buy and holders of securities, so we just focus on the longer-term fundamentals rather than short-term timing of the market. We think that gives us another advantage to be able to generate longer-term outperformance. We probably see this particular strategy within the broader context of a client's portfolio as being sort of a satellite addition to what may be a more core, larger cap holding. So, we think that adding emerging leaders or adding sort of X100 portfolio into a client's portfolio, provides the ability to increase diversification, to gain access to a higher growth segment of the market, and just to really sort of round out that overall Australian equities exposure. We view risk as being the permanent loss of capital. We try to sort of avoid that in several different ways. So, our focus on what we consider to be higher quality businesses, and then also taking that longer term fundamentals view. So if we think about potentially why we might lose capital or permanently lose capital, then we're really sort of coming down to a few things. There could be increasing competition, pricing pressure. So we invest in businesses that have sustainable competitive advantages. There may be a lack of growth. So we invest in companies that are operating in large industries that have large addressable markets with structural tailwinds sitting behind them. There could be regulatory interference. So we avoid regulatory risk. There could be credit risk. So, we invest in businesses that have low levels of gearing. Across the portfolio, we sit in a net cash position. So, we think really just sort of being able to focus on these longer term fundamentals, hold a portfolio of concentrated businesses, which we really understand, adds to and helps us with that risk management process. We tend to select businesses which potentially are already market leaders, but in markets which are in a very sort of niche position. They may be very early stage markets. So if you sort of think about Audinate as one of our holdings, that's a business that works in the AV market. It basically does away with all of the cables that you normally see on stage productions. Now that's a very large market globally, but the digitalisation of that market is very early stage. And they currently lead that market, but we see them really as being an industry leader over the next 5 to 10 years. So whilst they're not market leaders of large markets at the moment, we do expect those markets to continue to grow and for them to be larger leaders in the future. One of the companies that ticks a lot of the boxes for us is Beacon Lighting. If you look at the historical financials, then they tend to suggest that it's a high quality business. It's got a gross margin in the mid-60s. It's got a return on equity in excess of 20%, interest cover of 10 times. It's got robust history of sales growth, and it's in a net cash position. So we really like the historical financials to this business, but we're also very attracted to the future fundamentals. It's the clear market leader domestically. It has a store network of close to 120 outlets, which is vastly greater than the number 2 player in the domestic market, which only has 7 stores. We really like management. We think they've got a really strong ability to continue to expand that store network, but also convert probably about 30% of those stores into higher yielding superstores. So we think domestically they've still got quite a bit of growth. And then we're also attracted to the international opportunities. So, we think that they've got the ability to really sort of expand their international sales, especially within the US market, where that ceiling fan market is underpenetrated and vastly undersold.